Hey guys, it's Danny here with another investing video. I'm gonna try to keep these a little more brief. Not a whole lot. I actually continued the returns continues to go well. PSEC is correcting like I thought it would. It looks like it closed at 503. So we sold a bunch of calls. I've sold 29 calls on it for five each. So kind of assuming that most likely I'm gonna get called on this, at some point. But on the other hand, it's a pretty nice payout. Those 29 calls. What is that? What did I sell it for? The cost basis, $676.94. So close to $700. So that, $700. If it survives through the dividend, throw in like how much? Throw in about 170 on top. You know, um, 850-ish. Um, for that. So I had pretty big positions in my other accounts. I sold those off. Not a huge gain, but it was quick cash. And I did want to get in on Zim. This account I didn't achieve getting much in on Zim. I did do some better stuff. Other accounts. On one account I had Zim. I had two calls and I managed to roll them, and that was really nice when I managed to roll them. One of them I was going to get called on, so I took a very slight loss on that. No, actually, actually gained on that call because um, the call was sold about a month and a half ago, and based on how much it was above the price, I think I had sold that call for 125 and I bought it back for maybe 120. So I actually gained about $5 even when I rolled that one. The other ones were it was um, basically at the strike price. It was sometimes above, a little bit above, and sometimes a little bit below. But needless to say, that's not a very good call to buy because it's not desirable. Because they were both expiring on Friday. That's when I rolled them. Because what are you gonna pay for a call? That it's probably worth a few cents. So I probably got like $150 each or more. I think it was probably more like 180 for those calls, and then I probably sold them back for some pennies. Um, when it rolled. And then due to the earnings, those were some really nice calls to have after it rolled. But here, I did manage to sell just a little bit of PSEC. Well, actually increased my leverage a little bit, uh, but I feel good about it. One of my calls expired um, on one of the stocks. It's actually in the money. I may sell that, or I may just write another call, just depending how I feel about things. What I sold on Zim, that's actually probably. Oh, I guess it's technically based on my price. I got 18.98 on Zim. It's a 19, so it's like 2 pennies. But I mean, basically, my profit is the call. It's a 1 week call after earnings, and obviously, somebody who's buying that, they think it's gonna pop crazy big, and I agree. I think it's gonna pop crazy big. I just, based on my leverage position, um, I'm like, hey, I'm gonna take this, take the quick 100, 100 whatever, I think it's $123, and then they can just call it, and or maybe if it's not as good, it's at least a little bit of um, a, a little bit, of safety. Although I have to admit, I went huge on Zim. I just went bananas on it. I think it's going to be through the roof. Just my personal gut, and this is not financial advice. It's just, you're responsible for your investment choices. Obviously, this is just entertainment. But I so the PSEC I sold, and then also QYLD, I sold most all my QYLD because it's at a 1 year high basically almost, and I got quite a lot of appreciation, so I was getting like 12% dividend for a year or more, plus quite a lot of appreciation. And just what I'm seeing in tech is that I think that's got a lot of room to go down. I think it's very risky. I just don't like what I'm seeing in the Nasdaq. So I just like that sort of volatility is not good for covered calls. I mean, I think I was fortunate that the volatility reversed and went where it did, but I mean, I could be completely wrong. But the Nasdaq deeply deeply concerning for me. So I want more QYLD, but it's just like not now. So I'm not sure all the conditions, but NVIDIA is extremely concerning to me, the volatility there, and not in a good way. And Tesla is concerning to me. I mean, good companies, respect them, great companies, just not the sort of price movement I want for that sort of strategy at the moment. So yeah, I went really big in Zim and other accounts. I couldn't get a lot in here because I'm too leveraged. Um, but now obviously that's why I'm moving money. I've got a cash reserve. You know, I just wasn't also in a place to really do investing. And so a cash reserve, at the way the interest rates were, was a great thing. When you're not in the place, you don't have the time. And now I'm more in the place and I have some of the time. Um, well, I'm just gonna invest, as I have the time. If I'm not sure what to do, I'll just go something safe like some, nice, yielding preferreds. I mean, yeah, it's not going to be barn burning ever, but picking a nice yielding preferred if I don't have the time, that's what I'll do if rather than make a bad idea. But I mean, so far it's been good, 28.81%. I think that's good. And I think obviously, if PSCC gets called, that's going to keep bumping it. That's because PSCC, um, you know, um, um, not that I necessarily want it to be called. I mean, to be honest, just from a, you know, selfish, I mean, we're here to make money, but I mean, it's all if it went just below, if it stayed, between, 4.95 and 4.99, and so the call expired worthless, and then I could resell the calls plus collect that 15%, almost 15% dividend. That would be actually pretty nice. But I don't think so. I think that I, here's the thing is that I think that PSEC has a little bit of a suspect portfolio, but we've all known that for years. And so when you look at, I think that's where it comes down to. It's like Bloomberg said the sky is well, the sky can't really fall, based on write-offs if the write-offs are already. I mean, not that we know that there are going to be write-offs, but the point is that we have all been discounting the PSEC portfolio for years. Where are their metrics? Somewhere, not here. Okay, so price book of 5 point or point 5.6. So that basically that means net liquidation. The company is I'm not gonna say nearly double, but I mean it's like if the company could liquidate at book now, we would probably get, an 80% return overnight, and they distribute it all, and obviously companies don't do that. But the point is that what Bloomberg was saying is that PSCC has a little bit of a shaky portfolio, and you know, and and the thing is that what they said, they just said it in a really shocking way, and I think that they disturbed people with how they said it, and made it seem like the sky was falling. But the point is, the sky can't fall, um, wildly much when we're already, discounting that, like we are, Um, I think the 5 point, it was trading at about, 525, 530. That discount already, says that, we respect the 6%, the 6 cent monthly dividend, but we do re realize that maybe in the future there will be some cuts. So I think the Bloomberg report, it kind of, I think I don't want to say it was fear mongering. Um, I think it was a truthful report, but I think that it expressed it in a way that made people afraid. But in the other reality, it's like, haven't we already been um, viewing it that the portfolio is a little bit shaky for years, and it's already baked in. We already it was already legitimate. The price, they didn't say anything new. I think the way they said it was shocking. Um, but you know, um, like the concern about the payments in kind, you know, uh, is a sort of concern that maybe these debts aren't actually payable. But that's just another way of saying that the portfolio might be shaky, which is something that has been said for years. So I think that Bloomberg just used a lot of words that made people scared. But I mean, while they're truthful words, I think that people, it's from a perspective, I think that already people have baked in that the portfolio has some shake in it, but it's worth something, and so it's worth a lot. It's quite a lot, really. It's just a question of what is the appropriate value, and I think that uh, it was already so baked in all the concerns that it didn't really, you know, and that's why it's bouncing. Is that we didn't learn anything new. It just people got really scared, and then probably some people had stops on there, and their stops got blown out, which is really unfortunate for them. That's one of the reasons. There can be good reasons to use stops, but that's another problem. Is a news report comes out, your stops get blown out, and if your stops hadn't been blown out a couple months later, it would be back to where it was because not to say the report's not truthful, but we already knew all this, and just it put it in a way that made people afraid. Um, you know, but the thing is that the price already reflected the fear. So, but yeah, we'll see where things go. It's going to be a very interesting Monday for me. Definitely going to be listening in on that conference call. I don't want to tell you how much Zim I have. I said I would only go $32,000 in on a stock. I went in much, much, much bigger on Zim. I have it's a huge amount of money on Zim for me. Not huge, but I can, but I have about 60,000 in Zim right now, $60,000. So I'm hoping for a big one. Uh, it could be a little hurting on Monday if it's not good, but I don't think it's gonna be bad. I think it's gonna be wonderful. We'll see what happens though. All right, till next time, guys. Hope you have a good one.